Welcome to another installment of our video series of planning for tax changes. Today we're going to talk about estate and gift taxes. My name is Jeff. I'm joined by John Sluice of Intrust CPA. In this video, we want to share with you, what is the estate tax? Why are we talking about it? As tax advisors, professional CPAs, we feel it's imperative for us to talk to you about this because the proposed changes are quite dramatic. And we are seeing proposed. There's legislation floating around in Congress right now, and we are currently in a generous estate tax climate, but it could change in a hurry. Right. And what is estate tax? Some terms that are thrown around would be death taxes, inheritance taxes, transfer taxes, all of the above. The government in some way wants to tax the transfer of assets from one person to another, either if you gift that asset away to someone, or if you pass away and those assets move to your heirs, there might be a tax incurred. And this is something that isn't new. It was interesting to me, researching a little bit for this video. The IRS published a historical document that talked about how some form of transfer tax was imposed even way back to ancient Egyptian times. Wow. So centuries or even millennia, there's been some sort of transfer tax. It's just in recent years, when I say recent, within 100 years, the United States reinstated an estate tax. And so that's what we want to talk about today.
And I'll jump in here too. I think you hear about the word estate tax or transfer tax, and most people have an idea of what it is. It's out there, but most people also know that they feel like they should do something, but you know what? It's someone else. And I think an interesting statistic here is currently 0.1% of Americans are subjected to the estate tax. So for most people, it's something that you hear about and you say, that's them. What we're saying here under the proposed laws is that 0.1% is going to start impacting a lot more. Either the proposed or just the default, it's going to start impacting more. And so we wanted to take this opportunity to talk through, educate a little bit more of what it is. You said the names there, transfer tax, wealth tax, all those. So that way you understand a little bit more and some of the strategies around it.
And I think it makes the news cycle just because of the fact that there is a stigma about the wealthy not paying a fair share of tax. Mm-hmm. When we look at the statistics, the federal government brings in maybe $20 to $30 billion per year in estate taxes. Mm-hmm. So it's a really, really less than 1% of the budget overall.
It's a very, very small amount. And I think one thing to hear, and why you're hearing us talk about it, is in general, if you've got an estate large enough to be worried about it, you've probably been worrying about it. And so you've done the things to properly not pay it. What we're afraid of here is the numbers are going to go down as far as the threshold where you start paying, or the numbers of people paying it up or paying it is going to go up. And what I'm afraid of is that it's the individuals that are listening here that are all of a sudden are going to get caught by surprise of it, where you think, oh, that's that thing I don't have to worry about. That's only the wealthy. It's becoming that's not the case, that more and more people are going to be subjected to this. And so who's going to pay the tax are the people that don't think about it. This is a tax that can be avoided. If you paid the estate tax, it's because you did not do the proper planning. And so this is a tax that can be avoided. That's what we're talking about here. This is nothing new. This isn't anything that you haven't heard Jeff talk about in the past, myself talk about, but it's just becoming light more and it's in the media more because they're talking about lowering down the threshold even further.
So what John and I are seeing in practice is more and more middle class families can be impacted by this. So what we're talking about is currently the estate tax exemption is $11.7 million. So if you have assets that total more than that, you're going to be taxed if you were to die or give that much away. Mm-hmm. And the proposal is to bring it all the way down to $3.5 million. Now $3.5 million, yeah, that's a lot of money. But if you think about it, if in someone's lifetime, accumulating retirement accounts through various employers, even owning some life insurance on yourself, someone could easily have $1 million or more life insurance policy. and that would be includable in your estate in many cases. Now, there's ways to plan around that, and we technically aren't estate planners, but on the tax consulting and advisory side of things, we like to work with planners and attorneys to do the work necessary to make sure that you don't unnecessarily pay an exorbitant amount of tax. And it would be your heirs.
Yeah.
It'd be your heirs that are responsible to pay that estate tax.
Yeah, so Jeff, what you're saying is currently it's $11.5 million or $11.7 million. That's a big number. Most of the individuals that we're working with, it might be there, but it's a far-fetched. You're not really thinking about it. At $3.5 million, it's enough to where you need to be thinking about it because you add up the life insurance policy. And we don't forget about the potential that you may get an inheritance from your parents or your grandparents or your aunt or something else, that has to play into it because it's a value that when you pass away. And so that's something to keep in mind, that number is creeping up there as small business owners or as in 401ks for individuals that are there, that there's more and more of middle-class America that's going to start bumping into this tax.
And the tax rate is currently 40%. The proposal is a minimum of 45% and could even reach as high as 65% because of some surtaxes on the ultra wealthy.
So let's make the numbers really easy here and let's pretend it's a 50% tax. What we're saying here, this threshold that we've talked about, it's that threshold before you have to pay the taxes. The closest comparison is a standard deduction for your income tax. But let's say that it goes to the $3.5 million as the threshold, and you pass away and you have $5 million in your estate. What that would mean is your first 3.5 is tax-free, or it's actually taxed at the 0% rate. And then the next 1.5 million is taxed hypothetically somewhere between 45 and 60%. Let's say 50. That's $750,000 in taxes that you'd be paying. Half of what you'd accumulated at that point. It's a big number. And what you're hearing us say here is that's avoidable. It can be handled. It's not anything that you're going to go do tomorrow, but it's something that you should be thinking about and planning for.
And we talk a lot about estate taxes, but we also can't lose sight of gift taxes.
Yeah.
So for many years, the estate tax and the gift tax have been unified under one exemption. Current proposal is to separate the gift tax regime from the estate tax. And the gift tax lifetime exemption could go down to just $1 million. So if you give over that amount during your lifetime, then you would also be subjected to a gift tax. And that would have the same tax rate as the estate tax.
You've heard me now say that this tax is an avoidable tax. One of the easiest ways to avoid it is that you gift it to the next generation. So yes, it reduces down the amount, that exemption. That's the point of why we're tracking these. But if you had $11.5 million and you gifted away $4 million, it went down. That $4 million came off of your $11.5 million exemption, but it went to somewhere else. That separation now, what they're proposing to take it away from the estate tax and the gift tax is we no longer have that easy first item that we can use, which is gifting it away. Because if you gift it, you're limited to $1 million as proposed. And so that takes that first easiest tool away that we can do, because all you're able to do is gift $1 million to your inheritance or to your dependents. And so what that means is we lose a lot of the ability to transfer to those that you would gift, and you have to do other strategies.
Yeah, so you bring up a great planning opportunity this year. While the estate and gift tax regime is so generous, you can gift a lot of money this year into, let's say, irrevocable trusts. And there's just a whole slew of irrevocable trusts that could fit any given situation, which is why we recommend that you work with an estate planner.
And so I think that brings up a point, Jeff, here. You just mentioned irrevocable trust. I mentioned gifts. We mentioned a few other things. That is just the tip of the icebergs as what we can do. There's so many other tools that are out there. That's what an estate tax planner is going to be doing. We're going to work alongside of them. We're not diving into any of those in this video. This video is not to talk about the different strategies, rather to hear us saying out here that we feel under the proposed plans you need to be thinking about it and hearing these. Even if nothing changes. So this is an interesting topic here. Is right now it's at 11.7. That $11.7 million threshold is technically a doubling of what it was under or prior to the Trump change in 2018. So if nothing happens, if no political changes happen at all, that doubling goes away at the end of 2025. So it brings it back down to, right now it's 5.5 million. Big number, yes, but still attainable. So it's more than the 3.5, and you're going to definitely have fewer people that it applies to. But the default right now is it's going to go from an 11.7 down to 5.5. And so if nothing happens, and I actually kind of think that that may happen, if you know, that's a potential where they just go to the default, goes back to 5.5, you still should be using advantage of these higher ones that are the higher thresholds that are here right now.
I would agree, John, just for the fact that if you already have a few $1,000,000 in your estate, that's going to continue to grow and appreciate, and that could reach the 5.5, 6 million mark, you know, within, say, 10 years. So we have to be careful of that, and especially if you might inherit assets like you had mentioned previously.
Yep. And you're going to hear us harp on this too, is that that's future dollars. I know it gets a little confusing when we start talking about that, but don't just think and don't just tune out here because I only have a little bit right now. If you're a business owner, you've got the stock in your business, you've got what you might get from your parents, you have a 401k, it very quickly adds up to the bigger numbers.
So as an example of what it could cost somebody by not planning now, I wrote down a couple facts here. So let's just say that today you own an estate that's worth 11.7 million. That's the exemption. If you were to pass away today, your estate would owe 0 tax. That's great. Now, if you waited and did not do any planning and then passed away, say next year, and all the proposals take effect, your $11.7 million estate could have a tax of upwards of almost $4 million that your heirs would have to come up with, which means now you're liquidating assets that you wanted to pass along to children, grandchildren, descendants. And so that's a big tax burden, and typically unnecessarily. You wouldn't need to have paid that if there was some proper planning ahead of time. And that's why we're here today. We do feel that more and more taxpayers are going to fall prey to this estate tax if the proposals get enacted. So as you've heard us say, everything is currently being proposed, but regardless, as we just previously mentioned, the estate tax exemption is going to reset to something. If it's 5.25 million, maybe it's 3.5 million. A change seems to be in the works no matter what. So therefore, take the time, start planning now, because moving a lot of money out of an estate will take a while. Need to do proper planning, make sure you cover all your bases. And at the same time, also know that since this is all under proposal, we'll know more in October. That's when we see Congress may make some moves in this direction, and then we'll know for sure what's going to happen. Now I say for sure, but can we ever know for sure when it comes to taxes? We shall see. So I urge you to speak with your financial advisor, estate planner. If you're not sure who to talk to, please give us a call. We'll be happy to consult with you and get the team arranged.
Thank you, Jeff, and thank you for participating and listening here. We look forward to talking to you on this topic and others here in the coming days and weeks. Thanks for joining us.